All right, let's dive right in. In 2025, there was one asset that didn't just do well, it completely took over the headlines with a truly historic rally. And that asset was silver. Today, we're going to dissect the anatomy of this massive breakout. We'll look at the fundamental fuel, the key moments on the charts, and maybe most importantly, the huge divide it created between Wall Street and the everyday trader.
So let's just cut to the chase. This one number, this tells you pretty much everything you need to know. A staggering 170% year-to-date return. To put that into perspective, silver wasn't just a good investment in 2025. It was, without a doubt, one of the single best performing assets on the entire planet. It just completely shattered everyone's expectation.
And, a move this explosive, it drags what was once a fringe idea right into the mainstream spotlight. The question on everyone's mind suddenly wasn't if silver could hit $100 anymore, it was when. The debate became whether this wild prediction was now actually an achievable reality.
Okay, so to really get how we got here, we're going to break this whole thing down into 5 parts. We'll start with the price action itself, then we'll dig into the fundamental drivers, walk through the technicals, see who was buying and who was selling, and finally, look at the warning signs that started flashing as the market hit a total fever pitch.
First up, the super spike itself. Really, the story of silver in 2025 is how it went from this forgotten, kind of overlooked asset to a parabolic rocket ship that became a headline nobody in the financial world could possibly ignore.
And this chart, wow, this really puts the sheer scale of the move into perspective. The year kicked off with silver just kind of hanging around $29.50 an ounce, but by December, as you can see, it had skyrocketed past $79. And this wasn't some slow, gradual climb. It was an absolute explosion, with most of those gains packed into the second half of the year.
So what's behind a move this big? I mean, what's the real story here? That brings us to part 2, the fundamental fuel. Because this rally is built on a lot more than just pure speculation. It's actually rooted in real-world supply and demand.
And this right here, this is the core of the issue. You see, unlike gold, over 60% of all silver gets consumed by industry. It is absolutely indispensable. We're talking about modern solar cells that need 50% more silver than the old ones. AI data centers and high-performance servers, they rely on it. And the entire EV ecosystem, from the cars themselves to the charging grids, it's just a massive consumer of the metal. And the thing is, once it's used, a lot of this silver is just gone for good.
Now here is the crucial takeaway. 2025 marked the 5th year in a row that the world used more silver than it mined. This isn't some temporary blip, This is a deep structural deficit that has been systematically draining global stockpiles, and that set the stage perfectly for the price explosion we just witnessed.
All right, so with that fundamental stage set, let's move to our third section and see how all of this actually looked on the price chart. We're going to do a quick technical walkthrough of the key levels that really defined the anatomy of this breakout.
You can see from this timeline that the rally wasn't just one single move, but a whole series of breakouts. So after bouncing off key support back in April, the first real test came in June, when silver just smashed through that $35 resistance level. But the real ignition point, the moment that lit the fuse, was in August. A powerful breakout above $39.50, a price that had been holding the market down for months. That's what triggered that incredible 8-week surge that ultimately took prices to new all-time highs.
Now, a move like this, it creates a ton of excitement, right? But it also creates a major divide. In our fourth section, we're going to look at the core conflict that emerged in the silver market, this epic battle between the so-called smart money and the crowd.
So to understand this, we have to look at the Commitment of Traders report, or what everyone calls the COT report. It's basically a weekly publication from the US government that gives us this rare window into what different groups of traders are actually doing with their money. This isn't about sentiment or surveys, it's about real positions.
The report really breaks traders into a few key groups, but for our story, 2 are absolutely critical. First, you have the commercials. This is the smart money. These are the miners and industrial users who are in the market to hedge their business risk. And historically, they sell into strength and they buy into weakness. And on the other side, opposing them, you have the speculators, the hedge funds and retail traders who are typically trend followers. They're the ones buying as prices go higher and higher.
And as prices went parabolic, you can guess what happened. The crowd became unbelievably bullish. A late-year survey showed that a staggering 57% of retail traders now believed silver would cross the $100 mark in 2026. This kind of extreme optimism, well, that's exactly the kind of euphoria that makes the smart money commercials get very, very cautious.
And this brings us to our final section, a market at extremes. Because as that retail euphoria was peaking, Wall Street and the institutional analysts, well, they started raising some pretty serious caution flags. It created this really tense standoff as the year came to a close.
All of a sudden, analysts started warning that silver was deep in extreme overbought territory. Technical indicators that measure momentum, like the RSI, were just flashing bright red, hitting levels that historically signal a sharp correction is on the way. There were growing fears of a blow-off top, that final manic spike before a collapse. And at the same time, the high prices were forcing industrial users to find ways to use less silver. And despite all the hype, the big banks, they were forecasting an average price closer to $60 in 2026, not $100.
So this is where we end, right in the middle of this central conflict. When a market gets this hot, who do you trust? Do you listen to the incredible momentum you see on the chart? Do you follow the wild optimism of the crowd? Or do you pay attention to the quiet caution of the smart money who are positioning themselves for a completely different outcome? That is the ultimate question for a market at extremes.